On November 12th, the U.S. Energy Information Administration increased its Brent price forecast for 2025 and 2026, but still projected that the commodity will drop next year compared to 2025. According to its November steel, and EIA now sees the Brent spot price averaging $68.76 per barrel this year and $54.92 per barrel next year. In its previous steel, which was released in October, the EIA projected that the Brent spot price would average $68.64 per barrel in 2025 and $52.16 per barrel in 2026. Now, a quarterly breakdown included the EIA's latest steel projected that the Brent spot price will come in at $62.52 per barrel in the fourth quarter of this year and $54.30 per barrel in the first quarter of next year, $54.02 per barrel in the second quarter, at $55.32 per barrel in the third quarter, and $56 per barrel in the fourth quarter of 2026. Now, Dr. Chinan Adikwal is my guest. He is the Vice Chair, Africa Energy Council. He joins me live from Doha to review activities of the market today. Good afternoon. It's good to have you on as always.
Hey, Tolu, pleasure to be here.
Well, I think we should start with this volatility in the price of crude this time. As you know, OPEC Plus, there's been discussions around a price drop in 2026.
Yeah, absolutely. So, I mean, you just read it there, Tolu. 2026 structurally is showing, and for this one, just to be very clear, there's consensus here. Structurally is showing an oversupplied market for 2026.
Yeah.
The IEA agrees, OPEC agrees that, for 2026, there'll be, a structural oversupply in that regard. And that's reflecting in the price that you mentioned. So if you look at the revision that's just come from the IEA, they are forecasting oil, for 2026 around $53 per barrel across all the quarters, just like you read it there. The reality of it is that that's what we're seeing right now. And Tolu, I'd say this, bear in mind, last Friday just gone, we saw the attacks that Ukraine did on Russian oil and gas facilities in Novorossiysk, sort of around the Black Sea, the export facility. When that happened, immediately the reaction, of course, was, the price of oil went up because all of a sudden we started to think, well, supply will be constrained and all of that. That optimism has just been wiped off today. Okay, we're back to where we started today. Now, the reason for that is many analysts are treating all of this headline news as noise. The real biggie in the room, Tolu, is a question you posed to me, and that question is that of an oversupply. The oversupply question is a much bigger beast. Most analysts are pricing that in, from a price standpoint, way beyond all of this, the short-term volatility. In fact, we've just seen the U.S. open up, in terms of the gridlock in the Senate. That's clear. That should give us a positive outlook. But again, the market is treating it all as noise. The fundamental thing is oversupply in 2026.
And if that supply glut comes up, I'm also bothered because, like you said, a global glut looms. And that, for me, is big news. If that happens, what will now be the implication for the entire market and for countries like Nigeria that we depend solely so much on petrodollar?
Yeah, absolutely. So if that happens, and I'll answer your question first, but just to say to you, first quarter, so I'll say it this way, right? Bear in mind, OPEC Plus started rolling back the cuts they made in 2020. They started in April. They put quite a lot of barrels, 138,000, I think, in April, 138 again in May, and then I think they stepped it up to about 411, and then all the way to 548. And then, bear in mind, in October they went down 137,000 barrels per day again. November the same, and now in December they're doing the same. That has led to the oversupply a tiny bit. Demand has not really kept up, so of course the market is oversupplied. Now, if that happens, price is the problem here. Now we're seeing oil, like we say, at $64 per barrel today, and for 2026 we think you'll go down to the low, sort of the mid-50s, as we're saying there. The big issue with all of that is for oil states like Nigeria and some of the big oil states, that's a real problem because most of our budget is denominated based on oil proceeds, and we make our budgetary price so high. So if that happens, unfortunately, we'll be running a budget deficit. Budget deficit means we have to go and borrow. You have to go back to the markets to go and borrow. And then we get into this loop and the huge question, the huge problem that we've had repeatedly. The same has happened this year. Our budget marking price was $75 per barrel. Our volume expected for this year was 2.06 million dollars per barrel, both of which we have not been able to hit. I think in my last count, honestly, in my last assessment, we were about a certain point in the year, about $8 billion in deficit. Okay, just at that point. So you've got to look at it that way. Unfortunately, we would have to be going back to the market to borrow. And I think that's a big problem because we keep pushing the issue way into the future.
And you've talked about, we heard a war happened at the Novorossiysk hub sometime last week, and that actually affected, disrupted the market one way or the other. But I think movement has started around that hub now. Production is at peak and all is moving up. But today, I saw the prices. I'm not too excited by what I saw today, considering our own budget projections as a country, because I get worried when I look at the plus or minus there. We are not doing more production and the price is not up to what we projected. Obviously, we are already pursuing, revenue one way or the other.
Absolutely. Tulu, when it happened on Friday, when Ukraine targeted the facility Novorossiysk, around the Black Sea, oil went down about 2%. The price of oil went down 2%. There've also been a couple of attacks on some refineries, in Russia. I think the Ryan refinery, another one. All of those constrained demand. And I would say this, yes, the price of oil went down, but totally goes back to the same thing I am saying. Real traders recognize that all of that is just noise. In November of any year, we fully understand how the market is for the year. I'll tell you this, a real analyst who's been running from January to November now understands the market. He knows the fundamentals of the market. He knows what's noise and he knows what's real. At the point of November, we know what is noise and what's real. And without a doubt, that is noise to us. What we know is a huge oversupply coming up in the market. That's where to focus. If you're going to trade oil right now, that would be what you will be doing it by, because that's what really governs the price. Now, the other thing I'll say to bear in mind, many analysts also know that Russia is super resilient. You can say what you want to say, but this is fact. Most of the times when anything happens in Russia, you think it's a big setback, but those barrels still get back onto the market. Whether it is with the huge sanctions we saw in the past that was put on Russia, Russia found a way of discounting its crude that made it so attractive for Russia and India, and they were still buying. It still ended up on the markets and ultimately getting back into Europe. Or we'd see situations where they would use some vessels. If you sanction certain vessels, they have a way of using some opaque vessels that still get that crude oil onto the market. So Russia is a different, I'd say this, we've seen traditionally that many times when they try to choke them, that barrel still gets onto the market. And analysts now understand that. Now, I would say this. Bear in mind, on the 21st of November, so in the next week, that is when Donald Trump's sanctions, again, the real sanctions, come onto Russia. The sanctions that say we will constrain Lukoil, we will constrain Rosneft, we will constrain anybody trading with you, including India and China. So secondary sanctions. We've never seen this before. Donald Trump has put out on the market. That comes into effect on the 21st. We don't know the effect, the real implementation of this. If this implementation takes hold, and this affects about 1 million, 2 million barrels of the market, then I expect to start to see some real shift. Demand and supply will start to thin together and start to narrow. That margin would narrow. But for now, if I was, on the market and trading right now, I will be trading I'll be trading defensively, put it that way. My trading strategy will be entirely defensive on an oversupplied market, because that's what we see. In fact, I'll put it this way, and pardon me, I'm speaking quite a lot. I think to the 7th of November, when you look at crude oil stockpiles in the US, analysts expect it to be about 2 million barrels, just the increase in terms of the stockpile in the US. It ended up being 6 million. 3 times, 3x what was expected. So what we're seeing, and it's not just the US, it's in Singapore, we're seeing the same in the UAE, in Fujairah, we're seeing the same in Europe. Many of these tank farms are really, really swelling in terms of stockpile, and the barrels are not getting to the refinery. So demand is a problem. Demand is collapsing, supply is increasing, oversupplied market.
That's a nice one there. You took it ahead from me, because I was to ask you, Trump is still running helter-skelter for cheaper crude. He really wants to make the price of crude cheap. And that's something that we've seen. That's why we remember we started with the baby drill. We talked about this long ago. But now moving forward, and the entire market projections and all that we've seen, I bring you back to Nigeria. You heard of the 15% tariffs on imported petroleum products, and many analysts commended that. But now the government has pulled back on that, saying, no, let's hold on, we'll get back on it. I really would like to get your expert's view on that and what you think that means for Nigeria. That just came to my mind.
So, I mean, my view is always, okay, let's look at, 15%, let's think about this. A couple of things. One, we've just had a refinery that's built in Nigeria, $20 billion, right there in our backyard, it's supplying. The federal government then say this, that they will impose a 15% tax on any fuel inputs, which is the right thing to do. Because ultimately, if you have an investment in that area, what you would try to do is to try to make sure you protect that investment and that market. Because the last thing you want to do is to start to import. So think about this. Let's put this in perspective. You have a refinery that's just come in. Okay, we have, I can't remember the number. Certainly, I think when you look at the whole value chain, you're probably talking, maybe I'm being very conservative, I'd say probably directly and indirectly, maybe 60, 70,000 people employed by that refinery. So jobs have been created there. Those jobs are lucky. The people pay tax in Lagos. Lagos State is collecting this tax. The GDP of Lagos and Nigeria is growing as a result of that. When you import crude oil, all of that has been done in another country. You are just a consumer. So the government wisely thought, you know what, we'll make that uncompetitive. So we discourage people from buying. So we force them down the point of buying from this local place. So again, jobs would increase. And bear in mind, I would say this, we've gone, the plan now has gone from a 650,000 barrel capacity to 1.4. So there's a plan to increase that and expand it even more. So more jobs, more, all of that stuff. So it's a very clever, I'd say this, it's very ballsy. This is the reality of it. It's a really, really clever thing to do. Now, I appreciate that there are lots of interests that are on ground that are lobbying and making sure that this doesn't happen. And I know you have to pander and cater to all of them. But fundamentally, if you want to retain value in Nigeria, if you want to turn Nigeria into that hub that would supply the whole of West Africa and bring, Tolu, you've just been talking to a guest just before me, and you were speaking about, headline inflation coming down. Headline inflation has come down. Forex, Nigerian foreign exchange improving massively. All of these things are not coincidence. Headline inflation, yes, is driven by the CPI and the basket of things in there, but a huge component of that is energy, the price of energy. And the price of energy determines most things because everything has to be transported to the market. So when energy price becomes cheaper, then you see that headline inflation comes down. We're not talking core inflation, headline, it comes down. So these things are super important. You look at the price, the dollar exchange rate, it's been crashing down significantly. Why? Because a lot of value is being retained here within this side of it. So all of these macroeconomic things that are happening today in Nigeria are things that we need to look at very especially. I do not think that Nigeria should pander to the interests of a few people who have made few investments in tank farms and all of this stuff, and they continue to hold us spellbound. Yes, I do agree. Maybe you need to give them some time, and I agree with the president on that front. But I think we should phase it out immediately as soon as we can. If December is the day to phase it out, then so be it. But I think we need to move very quickly to discouraging any importation of refined product.
Oh, all right, almost finally. But my worry and the worry of many is the fact that no one wants that market monopolized. And that has been the worry and the fear, because we know that almost all countries still have their international oil companies, or their national oil companies, let me put it that way, been very active. But we don't know what's really happening with the NNPCL in recent times, but they are still trying to do their best, get their acts together after the PIA. So we expect a lot from them. So, but no one wants that sector monopolized. No one wants a kind of increase in price to more than what it is at the moment. I think those are the worries of many Nigerians, marketers and all. But aside that, if you want to react to, you could. What is your final outlook now for the market, particularly as we move towards the festive season?
Yeah, I think as we move towards the festive season, Tolu, I expect to see huge, not huge, but certainly decent demand. December is typically one of the best months for the oil price. We expect that because the festive season,
yes, sir,
flights will be booked. trips, and all of that will be done. So without a doubt, we expect to see demand. Demand will, spike up. So we expect price to be quite robust. Unfortunately, as we go into Q1, that's usually the weakest month of the year. January, February, March is the weakest one, just generally because of the season in the year. So I do think there will be some slackness in the first quarter. And like you would see for the forecast that you spoke about earlier, I expect to start to see a pickup as we go along into the remainder of the month. But I think as a nation, so a couple of things, I'll just throw a few things here. We've just seen an announcement by NUPRC of the licensing round that starts on the 1st of December. So NUPRC, Gbenga Komolafe, he just announced that last week in London at the Project 1 Million Barrels Investor Forum. Incredible. So what that means ultimately is a licensing round put out there for marginal fields so that investment dollars can come in and try to see how we can increase oil production. Today we are just oil about 1.4, you can argue, million barrels per day. If we're able to continue to push, then I expect to see that in 2026 that production should increase very significantly, probably towards 1.7, 1.8. That would not shock me at all, from my standpoint. We've also seen Gbenga Komolafe has just said about 46, I think, field development plans have been approved. So there are many things in the pipeline that seem to be coming, and a lot of these are reforms that have just been done in the last 2 years, maybe a year and a half. They're things we haven't seen before. The PIA is starting to be functionalized. So I think there's a lot to cheer for, but also a lot to be cautious about, especially the budget. As we go into 2026, we need to do our budget in a very clever way.
Well, it's a good way to leave it there. I must thank you so much, Dr. Chinandikwa, our Vice Chair, Africa Energy Council. Thank you so much, and do have a great day.
Thank you. Pleasure.